All right, thank you guys all for coming out. So today we're going to be talking about real-world applications of cryptocurrency. There's been a lot of conversation about cryptocurrency in the past couple of years. I'm sure you've probably heard all sorts of different stories about what cryptocurrency might do. And we're going to focus today on what it is doing and is poised to do in the really near future. So I'll be moderating. My name is Nevin Freeman. I'm the co-founder of a cryptocurrency called Reserve, which is a stable cryptocurrency. To my left, I have Jan Tallinn, who was a founding engineer of Skype, and more recently co-founded the Cambridge Center for Existential Risk and the Future of Life Institute. Next to Jan is Alex Thompson-Payne, who's the founder of Seven Mobile in Angola, as well as the Thompson Group, which also does business in oil and gas and hospitality. Next to Alex is Joe Waltman. Joe is the executive director of Give Crypto, which is a nonprofit based in the Bay Area and founded by Brian Armstrong, Coinbase CEO. Give Crypto is designed to directly distribute cryptocurrency to people in need around the world. Next, we have Luke Nosek, who is one of the co-founders of PayPal and Founders Fund. He's a managing partner at GigaFund, which he built to invest in the few most significant and transformative companies in the world. And he sits on the board of ResearchGate and SpaceX. And then finally we have Garrett Jones, who is a professor of monetary economics at the Mercatus Center at George Mason University. So thank you guys all for coming and joining us today. So basically, there's a common critique of cryptocurrency, which essentially boils down to, what's the point? Like, why do we need cryptocurrency? We already have a bunch of functional forms of money. And in many parts of the world, I think that that's actually a really valid critique. In parts of the world where fiat money is functional, why switch to something else? Even if you have a cryptocurrency that's pegged to fiat money and so it's stable against it, why switch? Like, the system's already working pretty well. And sort of the insight that we're here to talk about today is that there are a bunch of parts of the world where fiat money is not working particularly well. So there's about 16 countries with 20% or higher annual inflation at this point, and that's not particularly unusual in history. And so in that sort of situation, the ability to get out of that currency into something that is more stable is actually a really big deal to people. And so I want to start off with just a couple brief stories about this to try to make this real. So I personally started off skeptical that Bitcoin, with all of its issues, the volatility, the slow transactions, the expensive fees in some cases, could possibly ever be used as a form of money for actual transactions. And over the past year of doing recon for Reserve, and talking to people in these different countries that have these problems, we found that there are some cases that are so extreme that even Bitcoin is being adopted today for actual transactions. So there's a person I want to tell you about, and I'm going to change the person's name to protect his identity. So I have to make up a name now. We'll call this person John. Or let's say Juan, because Juan is a brewery owner in Caracas, the capital of Venezuela, which is notoriously, sort of talked about in crypto circles because it's undergoing hyperinflation right now. And so Juan started off trying to escape this problem by allowing people to pay in US dollars with PayPal. And this was actually functional for a while, but what started to happen is that people would go and buy a beer at his brewery and then go home and tell PayPal that the transaction had been fraudulent so that the money would get sent back to them. Because they're in a pretty desperate situation. They want to maintain as much money as they can. And there was really nothing that Juan could do about that. And so he's actually pivoted to the point where now he accepts Bitcoin and Dash and really any other cryptocurrency that he can hold in his wallet, because that finality of transaction of actually getting and receiving the money is so important to him. So despite the issues with volatility and transaction speed, this is happening, and Juan is representative. There's a bunch of businesses in Caracas that are actually doing this now. And it's actually become such a big deal that the government is trying to tax these transactions. Like, that's how much transaction is occurring. So they recently announced that you can actually pay taxes in all of these cryptocurrencies. You can pay taxes to the Venezuelan government with Bitcoin or Dash. And that's because they're trying to tax this massive transaction flow. And so, the and if you've used Bitcoin, you know how hard it is. So you can see that there must be like a really big problem that's trying to be escaped here. The problem is so big that people are also fleeing Venezuela. So 5,000 to 10,000 people per day leave without the intention of going back to get out of this situation. And I want to tell you what the experience is like for them if they're trying to send money back to their family, which is a really common activity. So let's say you're a Venezuelan living in Florida, which is a common place to go. If you've earned some money and you want to send it back to your family members who haven't been able to get out yet, what you end up doing is going on Facebook or Instagram and asking people in your network who would like to buy my dollars. Because you can't just send them back. You can't send them through the banking system. And so what ends up happening is you find someone to do that transaction, you send them US dollars to their US bank account in exchange for them transacting bolivars from their Venezuelan bank account to your family member's bank account. So no money actually crosses borders. And there's usually a 10 to 15% fee on that that's sort of baked into the exchange rate. So it's like really inefficient. And now your family member is holding Venezuelan bolivars that are literally losing their value at 10% per day. So what do? Well, they want to spend that money as quickly as they can. So they go to, say, a grocery store and they purchase the food that they need. Well, now that grocery store owner is holding bolivars that are still losing their value at 10% per day. And often they end up doing the same sort of transaction in the other direction to get their money out. So they find some informal currency broker, they transact to that bank account in Venezuela, they send those bolivars in exchange for another transaction happening in the US to their US bank account. And there's another 10 to 15% fee on that transaction. And so you can see that this system is barely functional, right? And it's actually so dysfunctional that people in many cases resort to just buying food in the US, in Florida or wherever you are, putting it in a box and shipping it to people in Caracas to make sure that the food actually gets there. And so these are the sorts of situations that do exist in some parts of the world that are actually prompting people to adopt cryptocurrencies despite how extremely difficult they are to use at this current stage. And so we're going to talk today about some more examples like this and some interesting insights. We tried to gather a group of people who have different takes on this situation to try to communicate why we think this is such a big deal. Not in the future, not in the world where we all convert to a crypto utopia, but right now. So I think I want to start off with Alex. So Alex, you've run a large business in a country in Angola that has undergone a lot of currency devaluations over the past few years. Can you just tell us, what is that like? What is it like to deal with that?
Yeah, well, it's funny, you were just saying that story. I literally have a couple WhatsApp groups that are literally just exchange of dollars, and it's just people selling dollars outside. So what businesses sometimes need, let's say we have a telecommunications business, in order to import phones, we actually will go onto one of these, somebody will say, I'm selling $500,000, we'll pay them locally, and 10-15% is low, literally it's crazy. But so we, as they said, own telecommunications, hotels, oil and gas business, and what happened is Angola is a country that is 94% oil-based. So before the big oil crisis in 2015, at $100 oil, they're doing 2 million barrels a day. There was $200 million coming into the economy every day. As soon as that dropped to $30 a barrel, those $200 million went down to $60 million a day. In an economy that's 94% oil-based, the government and the central bank, which actually controls all the forex there, said literally anything that's not food, medicine, oil, nobody gets forex. So then what happens is your actual market becomes the black market. It's the only place you can get dollars. And we went from, it went from 100, it used to be pegged to 100 to 1, and the black market was like 112. It went all the way up to 500 in 3 months. So, you can imagine, just an example is our telecommunications business. We're the largest phone importers in the country. All of a sudden, we were a great debt to cash ratio. We had about 20 million bucks in the bank. We owed about 5 million bucks to our bankers here in Switzerland. That's pretty stable and sturdy, right? Then all of a sudden, our 20 million bucks was in kwanzas. It was 2 billion kwanzas. All of a sudden, that went from being worth $20 million to $4 million. In 3 months, we're under the water, and it was crazy and how quickly that hit and having to fight that.
Yeah, and so with a business like that, if stable cryptocurrencies had been available like, how do you think that would have played out? Is that something that your business would have taken advantage of, or what do you think would happen?
You know, when I met Nevin, I said, where were you 3 years ago? Because literally that would have changed night and day, you know, for everything, for the business, like just being able to transact, not having to go through the central government, you know, just being able to transact seamlessly. And it's not only, as you said, the utility of it is also the facility of it. The fact that I can literally, the same minute, transfer anywhere in the world, any amount of money, that's huge. And gives complete just flexibility and, you know, just allows international trade and just creates more of what I think we will all see, a global economy and society.
Yeah, thanks. And if we have time at the end, we can open it up to questions. We'll see if there's time available. Joe, why don't you go next? So start by just telling us what is the mission of Give Crypto and sort of what has happened so far? What progress have you guys made so far distributing crypto to folks in need?
Yeah, thanks. So we are a direct crypto transfer nonprofit. We try to help people by transferring crypto directly into their pockets, not through another organization, through middlemen. That's kind of weird though, giving crypto to poor people. There's a kind of sad irony that the poorer you are, the less able you are to actually use crypto, the more expensive it is to make use of it. We're aware of that, and we believe that will become less of an issue as technology progresses and adoption improves. But we're really focused right now on trying to get crypto to people who have the highest likelihood of being able to use it. Ideally, for whom it is more useful than cash. Our hypothesis around that is that places where something is fundamentally broken have that characteristic, where people have a higher likelihood of being able to use it. 3 examples are broken money, broken government, and broken families. On the broken money side, Venezuela, hyperinflation, they're the elephant in the living room. We've done a half dozen experiments, projects in Venezuela. They generally consist of us finding someone on the ground to identify some needy recipients. We get them set up, start transferring crypto to them periodically. We also find a vendor on the ground who will accept payments in crypto. And we've seen some interesting side effects from just doing this for a few months now. One, the vendors are not only selling food and supplies, they're also cashing out the recipients, which we didn't ask them to do. They decided that on their own. They're happy exchanging bolivars for crypto. And 2, we're already seeing some of the recipients becoming vendors themselves. And we see some recipient-to-recipient transactions where little sparks of entrepreneurship and sparks of a marketplace are already starting up. On the broken government side, we feel that refugee situations are the best or worst example of failed governments. We've done similar experiments in Venezuela with Yazidis in Kurdistan, with Syrians in Greece, with Rohingya in Bangladesh. Very, very challenging situations, but we think we're having some impact. And lastly, with broken families, we recently linked up with a nonprofit that helps former or survivors of domestic abuse. So these are women who have been able to get out of the situation, and this nonprofit helps them achieve financial independence. This nonprofit has deliberately avoided working with active domestic abuse victims because the way they work, they can potentially put them in more danger if the abuser finds out. When we met each other, the idea was, well, why don't we give crypto to these people who are in these situations? It's much easier to hide from the abuser and maybe allow them to get out of the situation. So these are great. But they're very small. They're done in a very manual execution manner. Moving forward, we're right now building a platform that will hopefully allow this work to be done at scale and maybe even more effectively. That consists of software, some incentives, crypto or blockchain components, and a very, very big part of that is, of course, stable currency. We want the people that we send money to be able to use it. If it's a volatile currency, it has less likelihood of being a means of exchange.
Yeah, have you guys done any experiments sending stable cryptocurrencies to people yet?
Yeah, we did one experiment with a stable coin for actually the Syrian example. This happened to be Lebanon, and in that case, we didn't even mention the word crypto to the recipients. It was just money, or I think we used the word credits, and we think that's an important point that in a lot of these cases, they don't really care what's going on behind the scenes. They're getting something to put food in their mouths.
And then one more question for you. I'm sure you've thought about the feasibility of doing the same thing with cryptocurrency versus with normal money. What are some of the advantages of distributing this money through crypto as opposed to through existing fiat money systems?
Yeah, I mean, well, maybe best exemplified with the Rohingya example, where we found, and I apologize if I get a little emotional here, this one's like near and dear to my heart. We found a guy who was amazing, software student. He traveled from Dhaka, 15-hour bus ride to the refugee camps, basically snuck into the camp, found 20 widows. Found a store as well. We're sending crypto every week, and there's no way we could bring cash into a refugee camp. This is not a camp; it's a jail. He snuck into a jail, and because of the features of cryptocurrency, I can send it from my office in San Francisco directly to these refugees.
Yeah, thank you for sharing. So Jan, Jan has actually, I had a conversation with him about this beforehand. Jan has actually lived through a hyperinflation scenario in Estonia during the fall of the Soviet Union. So let's start off with just tell us, like, from a first-hand perspective, what was that actually like?
Right. So there are a couple of little known facts about Skype, and one of them is that all the Estonian co-founders, the founding engineers, they were my classmates at some point. And organ of entrepreneurship, when it became legal in Soviet Union, started by starting a games company, which we managed to hook up with some metal and oil exporter, kind of a bit shady figure, who also happened to have friends in Sweden in software business. So we managed to sell our first game to Sweden for hard currency during the time when indeed Russian ruble was in free fall. So indeed, like, I just remember a couple of fun facts about this. Like, first of all, we ended up making from that game, we ended up making more than our parents had made in their lifetime, measured in like nominal in rubles, and like sometimes the kitchen side of how this transaction looked like was kind of hilarious. We were a couple of teenagers, went to this shady figure's office, and then like he rummaged through the like drawers for various currencies, and gave us like a mix of like 3 to 5 currencies that we just stuffed in our pocket, and then like wandered the streets of Tallinn in both like at one hand like very giddy with just having like pockets full of money, with a lot of money, and then like at the same time being very fearful that somebody notices that we're suspiciously giddy.
Yeah, we've heard stories about the situation in Caracas where walking down the street with an ice cream cone is a dangerous thing to do because of sort of how few resources are able to be maintained in an economic situation. So I can imagine if you have your pockets stuffed full of cash, that'd be pretty sketchy.
Sorry, let me just add. Like I don't like, even though I have like fun memories of it, like it was a really serious situation. Like a lot of people lost their life savings when Russian ruble just pretty much vanished. And like the way Estonia got out of it was interestingly via peg. So we Estonian crown was introduced, and it was pegged to the Deutschmark.
Yeah. So actually, I have another question for you, but I'll come back to that because Garrett, I would like to ask you to comment there. So Garrett's a monetary economist. He studied the history of exchange rate pegs, and when we first hooked up to him, we had this big conversation about how stablecoins are not really a new technology. They're just a recycling of the exchange rate peg mechanisms that have been used for a long time. And so, Garrett, I'm wondering if you can kind of educate people for a few minutes about the history of exchange rate pegs and sort of how to think about that.
Yeah, it's been great watching the last few years of cryptocurrency innovation for me, because part of what I'm watching is people on the ground rediscovering both the theory and the practice of exchange rate economics. So people attempting in particular to create a stable coin are really trying to create an exchange rate peg, a stable exchange rate peg between their cryptocurrency and some other basket of currencies, maybe just the US dollar. So this is something that actually economists know a lot about. And so part of what I've talked about with them, and part of what I've talked about on Twitter since 2014 actually, is that there's a lot of classic ideas that really pay off. For instance, in the 1997 Asian financial crisis, the many Southeast Asian countries had runs on their currencies. Some countries were able to keep their pegs, and some countries weren't able to keep their pegs. And those that were able to keep their pegs, or at least stick close to their peg, they tend to have two things in common. The most important one, the classic one that any monetary economist would know about, is if you want to keep a stable exchange rate peg, you should have a huge pile of hard currency that you can show to people. So you can tell them, if I'm promising, one Hong Kong dollar for one US dollar, that's not the rate, but it's easy to remember. If I'm promising one Hong Kong dollar to one US dollar, I better have a big pile of US dollars so that anyone who shows up at the door, I can exchange their Hong Kong dollars for a US dollar. So that's one standard way, is have a big pile of hard currency. Of course, in the world of cryptocurrency, some of that hard currency can be kept as a portfolio of assets on a blockchain. That's a new innovation that's not really available to governments, but is available through modern technology. The second thing that you need to keep a stable exchange rate peg is a perception of really credible governance. That is the softer set of skills. That's super important, but it's so important that a lot of monetary economics in the last few decades has really been about the theory and practice of how governments can appear to credibly commit to an exchange rate peg. Some of that is just, having people act serious when they're in front of television cameras, sort of, just putting on a good show. But more importantly, it's about creating institutions that skeptical observers will actually believe in. So that mixture of the hard tool of hard currency that everyone can see, and the soft tool of credible governance that is widely believed seem to be important for countries that want to keep exchange rate pegs that are pretty stable. So Taiwan, Hong Kong, and Singapore, all to pretty strong degrees, were able to keep theirs during the crisis. And they all had those in common. Big piles of hard currency and credible perception of stable governance.
Yeah, and so this is something that we find really interesting about pegging currencies in the crypto space. So if you have a peg that's operated by a smart contract, you can actually sort of go pretty far to eliminating that second problem. Because it's not the case that participants in the network have to trust that a particular institution is going to buy or sell tokens in order to maintain that peg. They can actually look at the code and see what's going to happen. And so as long as you have a smart contract that really is out of the control of any central party, then you sort of get that fully rules-based monetary policy. This is something we're interested to see if this makes a difference.
And if I can point out, that's the technology, what technology makes possible through smart contracts. These are the kind of assumptions that no economic theorist would have the nerve to put in a paper. Economists, we get accused of making unrealistic assumptions about the world, but assuming the existence of the smart contracts that actually exist in the world now, no theorist 10, 20, 30 years ago would have the nerve to have written that down in a paper. But now it's something that's to some extent feasible.
And so, Garrett, do you know, can you tell us some stories about what it was like during the Asian financial crisis as a result of those currency issues? Like, what did that mean for people in those circumstances?
Well, let me point out that there's a big distinction when your currency is depreciating. That generally means domestic high inflation, sometimes hyperinflation. That is really bad news for people who have saved money in the domestic currency, and it's really good news for people who've borrowed money in the domestic currency. So the kind of people who will have saved money in domestic currency in countries like the Southeast Asian financial crisis countries, they'll tend to be like people at middle income and lower income folks. They're people who are carrying some cash around, but they don't have formal contracts like mortgages. Those of us who live in rich countries, a lot of us, once we're middle-aged and have a mixture of student loans and a mortgage, we're kind of hedged against inflation in a way. Because if there's a lot of high inflation, it's going to be really easy for me to pay off my student loans and my mortgage. But people in lower income countries don't have this debt, this nominal debt in the local currency that matches their nominal savings. So that can really wipe them out overnight. And people in these countries aren't foolish, they're quite wise. If I want to suggest one book about this, it'd be Portfolios of the Poor, about how people who live amid weak institutions, poor people, they choose creative ways to avoid getting stuck with a bunch of local currency printed by a government you don't trust. But they have to do workarounds that are much crazier than even the kinds of things we've heard so far. They're saving in forms of jewelry, the TV set they have around the house. informal relationships, informal guarantees they have with their neighbors and family. These are creative workarounds that are being done by people who are in a tough situation. People actually had, when people have something like dollars, Swiss francs, or in some future world a stable coin that they can reliably use, they totally switch to that, it seems.
So at the risk of being a bit controversial, can you, as a professor, can you sort of give us a grade, give the cryptocurrency space a grade on how it's doing at figuring out how to implement exchange rate pegs in the whole stablecoin world?
Well, let me start off by saying for crypto as a whole, I'll give that a C. Because in the early days of the world of crypto, you heard a lot of people saying, well, we've solved the problem of inflation with cryptocurrencies because certain cryptocurrency X or Y is guaranteed to only grow at a certain rate every year. And I learned in my freshman economics class that the supply of money is what matters. And that's true. That is what you learn in your freshman economics class. But in intermediate macroeconomics, which I'm teaching right now, I actually Skyped in my first lecture yesterday. In intermediate macroeconomics, what you do is you learn that demand can be really volatile. And this is especially true for small open economies. So small open economy macro is all about the fact that people in your country may need to use a currency to buy stuff, but they don't need your currency. There's always some chunk of the economy that are happy to switch to some other currency very quickly. And that lesson applies to crypto far more than it does to the world of fiat currencies. So in crypto, switching fiat currencies is quite easy. And so the instability that people worry about in real world countries applies even more to the world of stablecoins. So supply control, not enough at all. Demand control is important. And one way to create demand control to stabilize demand is having that big pile of money that tells people that you can exchange it 1 for 1 or whatever exchange rate you pick. So solving the demand problem is important. Keeping demand stable is important. Both theory and practice show this is true. The best theory I should mention is the Carrick and Wallace theorem, K-A-R-K-E-K-E-N, K-A-R-E-K-E-N. And the Carrick, so Wallace is likely to win a Nobel. His co-authors keep winning them. And their story is a theoretical argument about how exchange rates can in theory be totally volatile. The experience of real world countries show that in practice the theory holds up.
Great, thank you. All right, so Jan, I want to come back to the other question I had for you, which is one application of cryptocurrency that's been discussed is the fact that it really is sort of digital cash. And so people can transact on the internet in a way where you really are handing your money to another person. And this is relevant to perhaps some of the people on the panel who are tech entrepreneurs, because one problem you end up running up against as a tech entrepreneur is people will buy your service and then use that same chargeback mechanism I talked about with PayPal, and sort of that money is gone. So, Jan, I'm curious to know, do you have a perspective on whether cryptocurrency is going to make a difference to that line of business, like all those transactions on the internet, or do you think that for some reason that problem won't be solved that way?
I think it holds a lot of potential. So yeah, another little known fact about Skype is that we almost went out of business in 2004 when we introduced our first paid service, which was Skype Out. You could buy minutes to call phones. And what happened there was that we were kind of blown away by the amount of demand that there was. So we got just tons of money coming in. Again, we're kind of giddy about it. And then 1 month passed and the chargebacks hit. It turned out that it wasn't just kind of some random people doing fraudulent transactions. There was an entire industry. There were people who were buying Skype Out minutes, then packaging them as calling cards and selling them in supermarkets. Visa and MasterCard came to us and said, okay, this has to stop, and we were given an ultimatum, at which point Skype went into crisis mode, and we were trying to deal with this deficiency of the financial system. So yeah, in that, if we had indeed something that is more transparent, more trustworthy, then that we would have avoided almost going out of business indeed.
Yeah. And then, but I imagine that that's something that, you know, like, do you think that you would have actually, as that team at that time, if cryptocurrencies had been available, would you actually have forced people to pay in crypto in order to solve that problem? Because, you know, I've heard a lot of stories about how you sort of have to take whatever customers want to pay in. Do you think that it would have been worthwhile to force the switch, or do you think that that's something that wouldn't actually happen until cryptocurrencies were already commonplace?
Yeah, I think it would have been like a trade-off. For example, we did close PayPal because PayPal just didn't give us our money. And then I've had a lot of complaints on the forums. So we had a lot of complaints on the forums, but we said like, oh, okay, sorry, like we just, PayPal doesn't function. So we were able to kind of force people to use credit cards because like they had. But now, if there was just cryptocurrency at the current popularity level, it's kind of like, I think it would have been more popular than cryptocurrencies is now to actually kind of confidently switch away from credit cards.
Yeah, that makes sense. All right, well, so speaking of PayPal, Luke, let's talk about that. So I'm curious to know, you know, is your perspective on crypto, having come from built PayPal, that like essentially the problem of digital money is generally solved by things like PayPal and WeChat Pay, or do you think that the crypto story will play out differently? Because I definitely get met with a lot of sort of skepticism of like, okay, we already have global payment networks that are much easier to use than cryptocurrency. Again, sort of that's sort of the what's the point question.
Many people don't know this, but the mission of PayPal was to create a global currency that was independent of interference by these, you know, corrupt cartels of banks and governments that were just, you know, debasing their currencies. And we succeeded at building something very economically very powerful, enabled many small businesses. We're super proud of it, but we never achieved the mission. And I don't think it is solved by PayPal, precisely for the reason that you brought up in the Venezuela case, where PayPal is simply too centralized and too attached to the big financial institutions, Visa, MasterCard, the ACH networks, the SWIFT network, and it will do whatever it needs to do to keep those institutions happy. I remember the days when, you know, we were on the verge of being shut down many times because of our innovative products, and we learned to play. Yeah. And by doing that, you know, as soon as there is someone interacting in some area that might be perceived as sketchy or, you know, moving currency in a way that could cause fraud, PayPal just shuts it down, it freezes the money, or it pulls back from that market. It doesn't solve the problem. And I think with its current success and the current management, they're not going to go push the mission of the company forward. That was, you know, what we wanted 20 years ago. So somebody else has to do it. Not to mention that it was the wrong crypto foundation, but that's a different story.
And so why didn't you guys foresee this and build something that would solve the problem?
Well, you know, we tried. When we were building the company, initially, Max Levchin, he started working on his thesis in cryptography. He was my co-founder at PayPal. He researched Chaumian blind anonymous digital currencies, and then, you know, we that didn't think that was going to quite work. It was too centralized, and, you know, it wasn't quite anonymous. Then we eventually settled on an electronic checking system. And there was some compromise in the centralization of that system. Clearing had to be done at a central point. But I think we just never figured out quite the right algorithm, and we were pressured by investors to just get the product out. This is part of the problem of taking investment money prematurely. You know, I wonder what would have happened if Max has been able to sit around and brainstorm and, you know, work on the idea, and we can all talk about the mission, and maybe we could have figured out an algorithm that was more like the modern crypto algorithms, which I'm so grateful for the creators of Ethereum and Bitcoin and the new ones like Reserve for going out and trying to build the right thing before going and pushing for great adoption. And that was just the pressure we had from trying to be successful, the pressure we had from investors. And I hope that in the investment in crypto, the same thing doesn't happen.
Thanks. So it looks like we have time for maybe 2 audience questions. So does anyone have a question here?
Hi, Bebop Gresta, co-founder and chairman of Hyperloop Transportation Technologies. So we have been from 2013 a company that, let's say, made a choice, and the choice was not to raise as much money as we can and spend it as fast as we can, but use crowdsourcing. And we gave from day one stock option in exchange of work. And in 5 years, not only we're building an Hyperloop, but we're doing it with 900 people working from 42 countries, plus 45 of the top companies in the world. So we are a natural ecosystem that born with an embedded DNA that is kind of a new ecosystem of value, even if we haven't a liquidity yet. So, as you can imagine, we've been bombarded by every kind of crypto proposal. ICO, IC, CEO, SMO, and whatever else it's in the market right now. The problem is, if you want to do this at the planetary level with a serious approach, there's no way to understand how to do it without incur in mistakes that can basically cost you the company. So, do you think it's time now to create something or introduce in the market something that can give stability to the system? You know, after the first wave of whatever was okay, now I think it's time to actually put together some minds and really think about what is it that we want from this system. And what do you think about that? And if it's doable?
So I'll take that one actually. Yeah, we think it is doable. Essentially, the plan that we've come up with to do something like this is essentially to start off pegging a cryptocurrency to the US dollar, with the long-term plan of eventually having a currency that's backed by a basket of assets that is so diverse that essentially just tracks gross world product. And so the idea there is that you could actually get something that's not just a copycat of a fiat currency, but it's actually better than a fiat currency. It could be stronger worldwide than a fiat currency, and it's also something that's not regulated by any government. And so the same sort of sanctions and so on that are used with fiat currencies might not be available. So, you know, it's a long technical discussion on how to get there. So chat with me after the talk if you're interested in that. And for people who want to know more about how we're doing it, check out reserve.org.
What is the professor thinking of this?
Well, I mean, I don't think this has to start up on a global scale initially. I mean, the thing about small open economies, that teaches us that some economies that are pretty small can, by having what for them is a big pile of money, and by having good governance, that by itself is okay. If you look at countries in the world, there are quite a few countries that have low, stable inflation, have kept a pretty stable exchange rate for a long time. You don't have to be the US, the EU, China to be able to keep a stable currency. Small countries can do it, and so this is something that can, not just in theory, but in practice, start small and grow up and scale over time. And so it can, I mean, of course you need good governance to go along with this, obviously, right? But the idea of starting small and growing, having some growing pains and getting through that is totally plausible because it happens in the real world.
I think we have time for one more.
Hi, I'm Ersi Gattaker. I'm from Vault Security Systems. I've got a question to the panel. I mean, you guys have been talking about very, very important issues, but I would like to give you the opportunity to kind of wrap it up, each one of you, having one sentence of no more than 16 words. Give me the key message of what I should take home from this session.
Yeah.
Garrett, are you willing to start?
I'll start with that, yes.
16 words, eh?
I think I can do that. I'm on Twitter, so I'm used to staying brief. The problem of stablecoins is the problem of small open economy exchange rates.
build your foundation on the right people and the right algorithm with the right investors.
Crypto will actually be used in the developing world before the developed world.
Crypto will allow the developing world to transact and grow to become the developed world.
Fiat world has its bugs, and crypto might be an answer.
I think that sums it up pretty well. I would just say that if you haven't been to one of these parts of the world, you probably don't understand why this is such a big deal. So take the opportunity to go there and actually check it out. And I'll go beyond your word limit and wrap this up a little bit more. If you know, I hope that we've at least piqued your curiosity into the problems that are being solved right now and are about to be solved with this technology. Obviously an hour isn't enough time to really go into all the details. So if you do want to come to understand more about this, I have two recommendations for you. So one is to try to find a monetary economist and persuade them to talk to you a bunch about how this stuff works. You know, like Garrett's talking about, you know, maybe you can grab Garrett after this talk. Like Garrett's talking about, this is not a new technology, and actually how these different stable coins are going to play out is much more predictable than you might think. The second recommendation is essentially that if you have the opportunity, talk to people in these situations. Call people in Caracas right now and ask them what their daily life is like. Ask them about the way that crypto is being used or not being used. And then, yeah, if you have the opportunity to travel to a place like this, do it and sort of get to know that situation intimately. We're not going to be able to build the solutions for these things sitting in Silicon Valley or in Switzerland. You have to actually sort of get in and relate to those problems directly. And so, yeah.
I welcome you all to Angola.
It's true, Alex is very welcoming. He's not joking, so follow up on that. So yeah, thank you very much for coming. If you'd like to speak to the people who are on the panel, find us at the back after this. Thanks.